Stop everything you're doing right now. Tell your boss you need 5 minutes. Mute your presentation. If you're at the gym, put the barbell down. If you're mid-proposal, she can wait. This is bigger. If you own Tesla stock, silver, or anything tied to F's, manufacturing, electronics, or solar, do not look at your portfolio until you finish this. What I'm about to show you just crashed Tesla stock 12% in after-hours trading, and it will crash far more when the implications are understood. This isn't just about Tesla or FZ, it's about every industry that depends on silver. Put your phone on airplane mode. Close TikTok. Your attention can last 24 minutes, because what you're about to hear will change everything you think about the silver shortage, industrial manufacturing, and the next 7 days. Ready? Let's go. It is Wednesday, January 15th, 2026. At 2:34 p.m. Eastern Time, Tesla filed a Form 8K with the SEC. An 8K is for material events shareholders must know immediately: mergers, executive departures, bankruptcies, financial catastrophes. Today, Tesla filed an 8K announcing something I never thought I'd see. I'll read the exact text. Tesla Incorporated announces a material supply chain constraint affecting our ability to maintain current F production levels. Specifically, Tesla is experiencing a critical shortage of silver and broken bar. Despite significant efforts to secure additional supply of broken bar, we have been unable to procure sufficient quantities of broken bar. Tesla projects a 40% reduction in vehicle production capacity beginning January 22, 2026 if adequate silver supply cannot be secured within the next 7 days. Let me translate. The world's most valuable car company is running out of silver. In 7 days, without it, they shut down 40% of production. Not slow, not delay a shutdown. This isn't a logistics issue or contract dispute, it's an absolute physical shortage of a commodity Tesla needs to build cars. If Tesla, with all its money, purchasing power, and supplier relationships, can't get silver, then nobody can. This is game over for the industrial silver market. I'll prove it. Start with the numbers. So this is Tesla's own disclosure. They require 2.7 million ounces of silver per month to maintain production. That comes from F batteries at gigafactories Nevada, Texas, Berlin, and Shanghai, plus power walls, megapacks, solar panels, and solar roofs. Each Model 3 uses about 0.74 ounces, Model Y, 0.82 Model S, 1.1 Model X, 1.3 Cybertruck, 1.5. Tesla produces 1.8 million vehicles annually, 150,000 per month. At an average 0.9 ounces per vehicle, that's 135,000 ounces monthly just for cars. Adding energy products brings the total to 2.7 million ounces. Here's the problem. According to the 8K, Tesla's contracted supply is 1.1 million ounces monthly, at just 41% of need. They've been making up the difference on the spot market. In December, they sourced an extra 800,000 ounces spot. Early January, 500,000 this week. Spot offers are down to 340,000 ounces. Total available, 1.1 million contracted plus 340,000 spot equals 1.44 million ounces. Total needed, 2.7 million. Shortfall, 1.26 million ounces, a 47% deficit. Tesla is short almost half the silver they need and just announced they can't find it at any price. Context is staggering. Tesla's market cap exceeds $800 billion. They have $65 billion cash. They have relationships with every major miner, refinery, and dealer. If anyone can source silver, it's Tesla. They have the money, connections, and purchasing power, and they can't get it. That tells you the silver is not available. Period. This isn't a price issue or Tesla being cheap. The 8K says they've been buying spot, paying premiums, doing everything possible. They still can't get enough. I called a wholesale silver dealer after the announcement. I asked, if Tesla called needing 1 million ounces at any price, could you source it? He laughed. Absolutely not. I couldn't source 1 million ounces in a month with 6 months and unlimited budget. The metal doesn't exist in available form. It's all spoken for or contracted, allocated, gone. That's from a dealer moving millions of ounces annually. He can't source it because the industrial silver market is empty. Tesla just confirmed it publicly in an SEC filing. Let me show why normal market mechanisms can't fix this. In a functioning commodity market, when industrial demand exceeds supply, 3 things happen. Price rises until buyers drop out, existing holders sell inventory at high prices, and producers ramp up production. That's supply-demand equilibrium 101. None are working now. First, price increases aren't reducing demand. Silver rose from $85 in early January to $91 today, higher 7% in 2 weeks. Demand hasn't fallen. Tesla needs 2.7 million ounces monthly regardless of price. Apple, Samsung, First Solar, Hanwei EVRAF, Electronics, and Solar Company needs silver. Their demand is inelastic. They can't substitute aluminum or copper. Silver's unique properties are high electrical, thermal conductivity, corrosion resistance are essential. When price rises, industrial buyers pay more because the alternative is shutting production, which Tesla is about to do. Second, existing holders aren't selling inventory. Miners and refineries with silver aren't selling at $91 when Shanghai trades at $104 and India at $132. They see the shortage is real and prices are going higher, so they hold. Available supply decreases, not increases. Third, producers can't ramp up production. 70% of silver is a byproduct of copper, lead, and zinc mining. Only 30% comes from primary silver mines. You can't just produce more silver, you'd need to mine more copper, lead, zinc. Expansions taking years. Supply is fixed and inelastic. All three balancing mechanisms are broken. Demand won't fall, existing supply won't come to market, new production can't ramp up. The market is stuck. Tesla is the canary in the coal mine. Why can't Tesla just buy from Shanghai or India where silver is available? 3 reasons. First, China imposed export restrictions on silver January 1st. You can import into China, but exporting requires a government license, and China isn't issuing them. Why? Chinese industrial buyers BYD, cattle, Longi Solar are competing for limited domestic supply. The government protects domestic industry by keeping silver inside China. Even if Tesla paid a $14 premium in Shanghai, they can't get the metal out. It's trapped. Second, even if they could export, logistics take time. Shipping silver from Dubai to Los Angeles takes 6 weeks. Refining to Tesla's purity standards takes 2 more. Fabricating into paste or wire takes another week. Total, 9 weeks. Tesla needs silver next week. A production halts January 22nd, in 7 days. No time for overseas shipping. Third, spot markets in every country are thin. India is at $132 per ounce, but available quantity is minimal, maybe 50,000 ounces nationwide. Tesla needs 1.26 million ounces monthly. 50,000 is 4% of 1 month's shortfall. London is tight. New York dealers are sold out. Refineries are backed up 8 weeks. There's nowhere to source Tesla's volume in their time frame. The arbitrage that should let Tesla buy overseas and import is dead. Metal is trapped behind export restrictions, too small in quantity, or too slow to move. Tesla is stuck. They can't get silver, and in 7 days, they shut 40% of production. This proves the industrial silver shortage isn't coming, it's here, right now, today. For 6 months, analysts warned of structural deficit, demand exceeding mine supply, inventories drawn down. The crisis arrived. Tesla confirmed it in an SEC filing. Official, public. A Fortune 50 company admits it can't get a commodity it needs. When was the last time a major corporation announced a production shutdown because a raw material doesn't exist in available form? Not from a strike, logistics, or supplier bankruptcy, from physical unavailability. I can't think of an example in 20 years. This is unprecedented. It proves something more important. The COMEX paper price of $91 is fake. If silver were really $91 and available, Tesla would buy it at $91. They can't. The filing says spot availability collapsed. They're willing to pay, have the money, but metal isn't available. The real price here where physical silver is actually available is much higher. Shanghai is $104, India $132, US silver eagles $142. For industrial wholesale, the real price is likely $120, $150. Even at that price, it's not available in Tesla's quantities. We have mathematical proof. Paper and physical have diverged. Look at the past 2 weeks. January 1st, market tight, Shanghai $8 premium, COMEX inventory dropping. January 8th, CME raised margins 15% to stop the rally. It didn't work. January 15th, this morning, COMEX published first notice data showing 47,000 contracts standing for delivery at 10 times available registered inventory. COMEX faces a delivery crisis. 6 hours later, Tesla announces they can't get silver and are shutting production. See the pattern? Escalation. Week 1, prices rise, premiums expand. Week 2, COMEX delivery crisis. Week 3, industrial production halts. Tesla's announcement is catastrophic because they're not the only user. Global industrial demand is 70 million ounces monthly, electronics 50M, solar 15M, EVs, including Tesla, 5M. If Tesla is short 47%, what about Apple, Samsung, First Solar? Every industrial user has been competing for the same limited spot supply. The spot market is empty, meaning every industrial user faces the same crisis. In the next 2 weeks, expect more announcements. Apple delaying iPhone 18, First Solar cutting guidance. Samsung reducing TV production. This isn't just Tesla, it's the entire industrial economy depending on silver, or breaking simultaneously. Manipulation, price suppression, assumptions of adequate supply are all failed. Tesla's announcement is proof. Banks are trapped, and Tesla's news is their worst nightmare. Major bullion banks are JP Morgan, HSBC, Scotiabank have been net short silver for years, selling paper to suppress prices, assuming they could cover by buying spot. They were wrong. Tesla proved the spot market is empty. If Tesla with $65 billion cash can't buy spot silver, how do banks cover their shorts? Say JP Morgan is short 50 million ounces at $91, a notional value $4.55 billion. Their plan, if price rises, cover by buying physical spot and delivering against shorts. Tesla proved spot is unavailable. JP Morgan can't cover, they need 50 million ounces, but there's none to buy, not at $91, $100, or $120. Tesla couldn't source 1.26 million at any price. How does JP Morgan source 50 million? They can't. They're trapped. The cover price isn't $91, it's what the industrial market pays. Tesla's filing doesn't state quoted prices, but if they couldn't get metal, offers were non-existent or too high. Say the real industrial price is $127, from dealer whispers. If JP Morgan covers at $127, they lose $36 per ounce. 50 million ounces, $36 equals $1.8 billion loss for JP Morgan alone. Multiply across all banks, $5, $10 billion collective losses. Banks can absorb billions, but they'll fight to avoid it, manipulate prices down, get COMEX to declare force majeure for cash settlement at lower prices. Tesla's announcement made their job impossible. The shortage is now public. Every investor, trader, CEO knows. A Fortune 50 company confirmed it in a legal document. Banks lost control of the narrative. Once the narrative is lost, the price is lost. Price goes where industrial buyers will pay. Tesla showed they'll shut production rather than pay above a threshold, meaning the clearing price is above that threshold at probably $150, $180, maybe $200. When the alternative is stopping production, you pay whatever it takes. Banks are short at $70, $80. They're about to get crushed. This isn't isolated. It's part of a global industrial commodity crisis. Copper just hit an all-time high, $12,600/ton, toner up 37% yearly. Lithium prices tripled. Cobalt, nickel, rare earths are all in shortage. Every critical mineral for the green energy transition is short simultaneously. Governments are panicking. The US added silver to its critical minerals list in December. The EU announced a Critical Raw Materials Act. China imposed export restrictions. Every major economy recognizes commodity supplies are inadequate. Tesla's announcement confirms the crisis moved from potential problem to production halting reality. Look at the stock market. Tesla dropped 12% after hours. A $96 billion market cap wiped out in 4 hours. Rivian down 8%, Lucid 10%, Everaf stock hammered. First Solar down 14%, Enphase 9%, every solar stock crashing. Commodity producer stocks, Silver Minesa First Majestic, Hecla, Co-Euro up 15% to 20% after hours. If silver is so short Tesla shuts production, prices will explode, and miners will print money. This is the greatest wealth transfer in commodities in modern history. Wealth moving from industrial users needing silver to miners producing it, from short banks to long investors. Globally, India's Tata Electronics reports 8-week lead times for silver paste, normally 2 weeks. South Korea's Samsung and LG are hoarding, building strategic reserves. Germany's Volkswagen is negotiating long-term silver supply agreements. Japan's Panasonic increased silver sourcing budget 40%. Every major industrial user worldwide faces the same crisis. Supply inadequate, lead times extending, prices rising, availability disappearing. Tesla is first to publicly announce a shutdown. They won't be last. Over the next 30 days, expect a wave of announcements from industrial companies across sectors, all saying, we can't get the silver we need. Production is impacted. This is the industrial silver crisis going mainstream. Once mainstream, every business journalist and analyst understands silver is the critical bottleneck holding back the green energy transition. That narrative takes hold, and price goes vertical. Governments will panic buy for strategic reserves. Industrial users panic buy to avoid stoppages. Investors panic buy expecting explosion. Miners can't increase production fast enough for 3-5 years to ramp up. Demand is here now, this week. That mismatch drives prices to unimaginable levels. What does this mean for you? The next 7 days are critical. If you own physical silver bars, coins, Rounds in your safe or vaulted. Do not sell. Do not think about selling. You hold the most valuable industrial commodity on earth. Tesla desperately needs it and can't find it. COMEX says $91. But Tesla can't buy at $91. Shanghai $104. India $132. Wholesale industrial $127. The real price, where physical trades when industrial users are desperate, is likely $140, $160 now, going higher. In 2 weeks, as more users announce shortages and halts, panic intensifies, driving prices to $180, $200, $250. Hold physical. This is the position you want. If you own silver ETFs like SLV or PSLV, think carefully. SLV is custodied by JP Morgan, a major short. Does JP Morgan actually have all silver backing SLV shares, or is it lent, hypothecated, pledged multiple times? Tesla proved spot is unavailable. How does JP Morgan have 600 million ounces in a vault? When crisis intensifies and everyone tries to get physical simultaneously, SLV will announce they can't deliver or they'll cash settle. You'll get $91 per share while physical trades at $160, losing $70 per ounce trusting paper. Get out of SLV, sell it, buy physical this week. PSLV is better. Royal Canadian Mint, better redemption terms, but not totally safe. If the Canadian government nationalizes silver reserves, PSLV holders could be forced into cash settlement. The only safe place is physical metal in your possession. No government, custodian, or counterparty risk. If you own silver mining stocks, you're about to see the best returns of your life. When industrial users shut production because they can't get silver, producers' profits explode. First Majestic, Hecla, Kerr, Endeavor. These stocks could 10x. At $180 silver with $25 production cost, profit margin is $155 per ounce versus $66 at $1.91. A margins more than double. Earnings explode, stock prices follow. Hold, miners add on dips. This is a multi-year bull market. If you own Tesla stock, I have bad news. A 40% production cut is catastrophic. Tesla produces 150,000 vehicles monthly. 40% is 60,000. At $50,000 average sale price, that's $3 billion lost monthly revenue, $36 billion annually at risk. Tesla's current annual revenue is $96 billion. They just put 37% at risk. The 12% drop after hours is just the beginning. As analysts revise earnings and the halt becomes reality, Tesla stock could drop 25% to 35%. If you own for long-term vision, this is a buying opportunity after the crash. If you own for smooth growth, get out of this will be ugly. If you don't own silver and are thinking of buying, act immediately and not tomorrow, today. Now, Tesla's announcement just made every industrial user aware of the shortage. Tomorrow at market open, panic buying begins. Industrial procurement officers at Apple, Samsung, First Solar will call dealers locking in supply. Commodity investors will buy physical and futures. Demand surge will overwhelm available supply. By Friday, the retail market will be sold out. You have a 48-hour window. Call a dealer today, buy what they have, pay the premium, get ounces. Next week will be too late. What's next? Short term. Next 7 days. Panic. Markets open Thursday, January 16th. Silver futures will gap up. I expect COMEX to open at $98, $102, $7, $11 gap from today's $91 close. Shanghai will gap to $115, $120. Premiums expand. Physical dealers will raise premiums. Silver Eagles at $142 yesterday will be $155, $160 tomorrow, selling out in hours. By Friday, expect more corporate announcements, so maybe Apple, First Solar, Samsung. Each drives prices higher. By January 24th, COMEX could be $110, $120. Shanghai $130, $140. Retail $170 plus and sold out. January 22nd, Tesla's production halt begins. Headlines: Tesla shuts 40% production due to silver shortage. Mainstream coverage on CNBC, Bloomberg, Wall Street Journal brings a new wave of buyers. So retail FOMO. Your neighbor, coworker, uncle will try to buy silver, and there will be none left. Medium term. Next 30 days, government intervention. When industrial production halts from commodity shortages, government sacked. The US will convene emergency meetings. Mining companies will say expansion takes 3-5 years, new mines 7-10 years. The US has no strategic silver reserve to release. Their only option, negotiate with other countries, Mexico, Peru, Australia, but those countries need silver too and won't export. Governments will be stuck. They can't increase supply or release reserves. They can only let price rise until supply and demand rebalance. The rebalancing price is much higher than $120. Analysts will publish reports. Silver deficit to persist through 2027. Industrial shortage could last 5 years. Price target $250, $300. Hedge funds, pension funds, smart money pile in. By mid-February, physical silver could be $150, $180. COMEX might be $130, $140 if no force majeure. Premium structure. COMEX paper $130, Shanghai physical $160, India $190, US retail $200 plus. An unavailably complete bifurcation. Two separate markets. If you hold paper, you'll wish you'd converted to physical. Long term, next 12 months. Permanent changes. Industrial users will secure long-term supply agreements directly with miners. Tesla will sign 10-year contracts with First Majestic or Hecla at fixed prices, or maybe $160, $180. Every major user will do the same, locking up huge portions of future mine supply. The spot market will shrink. Availability for investors and small users will be very limited. Silver will trade like a captive industrial metal, not a free market commodity. Price stabilizes at a new, much higher equilibrium. I think $180, $220 for physical. The paper market, if it exists, might trade at a discount at COMEX at $150 while physical is $200. A $30, $50 premium persists because physical supply is locked in industrial contracts. Miners will print money. At $180 silver with $25 production cost, profit is $155 per ounce, or 70% to 80% margins. They'll be the most profitable miners globally. Stock prices will reflect it. First Majestic at $10 today could be $80, $100 by end of 2026. Hecla at $5 could be $40, $50. These are 10x returns, all due to the industrial shortage. Tesla confirmed. Final data. Global annual silver production 1 billion ounces. Industrial demand 840 million ounces, leaving 160 million for investment, jewelry, etc. Industrial demand grows 8% yearly. EFs, solar, electronics expanding at 8% growth. Next year's industrial demand will be 900 million ounces, leaving only a 100 million ounce surplus from mine production. Investment demand is surging. If it goes from 160 million to 300 million due to the Tesla crisis, the entire surplus is consumed. There's no buffer. Any disruption, a mine accident, refinery fire, transport issue, creates immediate shortage. The market is so tight there's zero room for error. Prices will stay elevated for years because the structural deficit is real. Industrial demand growth unstoppable. EFs and solar are the future. They need silver, and supply can't keep up. Tesla's announcement isn't a one-time event, it's the first of many. The beginning of a multi-year industrial commodity crisis. Position correctly, and you make generational wealth. Position incorrectly, a hold paper or industrial user stocks and you get destroyed. Final message. Tesla's announcement isn't just about Tesla or EFs. It's about the entire industrial silver market reaching the breaking point. Tesla needs 2.7 million ounces monthly, can only source 1.44 million, is short 47%, and is shutting 40% of production. The world's most valuable car company, with $65 billion cash and every commodity connection, can't get silver. That tells you the shortage is real. The $91 paper price is fake. The physical market is at $120, $160 and rising. Every industrial user faces the same crisis, and short banks are trapped. This is game over for the paper silver market, the beginning of the greatest commodity squeeze in modern history. Decide now, are you positioned correctly? Do you own physical metal, or paper promises about to be worthless? Don't wait for more confirmation. A Tesla gave it. Don't wait for prices to drop, but they're going to $150, $180. $200 plus. Don't wait for mainstream media to say it's okay to buy. By then, there'll be none left. It is Wednesday, January 15th, 2026. Tesla can't get silver. Production halts next week. The industrial shortage is confirmed. Banks are trapped. The system is broken. Physical silver is the only winning position. Get out of paper. Get into physical. Call your dealer. Place your order. Pay the premium. Do it now, today, this hour, tomorrow at market open. When every investor understands Tesla's announcement, it will be too late. Dealers will be sold out, premiums at 200%, and you'll have missed the opportunity of a lifetime. This is Asian Guy. Like, subscribe, share. Tesla can't get silver. Game over. Get physical now.